Welcome to the second of our series of three courses on the subject of auditing, Acc302. Today, in Lesson 1, we discussed the first two chapters of the middle part of the text covering evidence and substantive testing. When the audit collects evidence, it must first be appropriate. To be appropriate, evidence must be persuasive, valid, and relevant. Auditors are not generally required to authenticate documents, neither do they have to have convincing evidence. The point here is to present a case based on limited sampling of the records. Auditors may accomplish more than one objective with a given procedure. Some objectives may require more than one procedure to accomplish. The text provides three groups of financial assertions. The first is assertions about classes of transactions and events. Occurrence is the recorded transactions have occurred and pertain to the business entity. Completeness, all transactions that occurred have been recorded. Accuracy, amounts have been recorded appropriately. Cutoff, events are recorded in the correct accounting period. And classification, transactions are recorded in the proper accounts. The second set of assertions about the account balances at period's end. Existence, assets, liabilities, and equities as listed do exist. Rights and obligations, the entity controls assets and actually owes the obligations. Completeness, all assets, liabilities, and equity have been recorded. Valuation and allocation, all three are recorded at proper amounts, and appropriate adjustments have been made to these amounts where needed, as for instance depreciation. The third set of assertions are about presentation and disclosure. As follows: occurrence, the disclosed transactions have actually occurred. Completeness, all disclosures have been included. Classification and understanding, financial information is presented clearly. Accuracy and valuation, finally, meaning financial information has been disclosed and shows the correct amounts. Evidence must also be reliable. For example, directly obtained evidence is more reliable than obtained indirectly. External evidence, obtained from independent sources, is more reliable than internally generated evidence. Financial statements processed from accounting data under conditions of adequate internal control are more reliable than those under weak controls. Written evidence is more reliable than oral evidence. Finally, evidence should be sufficient. Conditions that require greater quantities of evidence include greater inherent risk, greater control risk, and a lower materiality level, higher expected levels of fraud and error, and lower reliability of evidence. Cost-benefit consideration and difficulty in obtaining evidence are not sufficient reasons for omitting procedures that are indicated as required under the circumstances, meaning that, as we discussed in the first class, the first audit may not be a profitable one, and it is not until the second audit that generally the client has paid enough to yield a profit to the firm. Little side note there that's not in the notes. Underlying accounting data is not sufficient to support financial statements. Corroborating evidence is also needed. This can take the form of checks, invoices, contracts, minutes, confirmations, bank statements, and written letters of representation. Certain electronic data may not be retrievable after the passage of time and may require testing several times per year. When data are electronically transmitted, processes, maintained, or accessed, the auditor may determine that it is not possible to reduce detection risk to an acceptable level. In this case, we may perform tests of controls or indicate the issue in the audit report as qualified with a disclaimer statement. The auditor may also employ audit software to extract evidence from the client's database. Chapter 2, quite a bit shorter, presents substantive tests. These are procedures that are meant to detect material misstatements and are used to obtain appropriate and sufficient evidence to support the auditor's opinion. A list of procedures and their objectives is presented that includes substantive testing. We will examine these, you will examine these further in your reading rather than discuss them here on the video at this time. Substantive testing usually focuses on the balance sheet. Assets are tested for overstatement and liabilities for understatement. An example is given in the text. Please look at it carefully. The auditor may directly test financial balances by recalculation, confirmation, or observation. Another procedure is to perform footnoting and cross-footnoting. This is described as adding columns of numbers and adding across the columns. Other procedures listed and described are inquiry, inspection, review, confirmation, analysis, recomputation, observation, and reperformance. Be sure to read the chapters in their entirety. And because the material is rather sparse, you will probably find it necessary to contact me directly. Please do so. Use Moodle, and I will attempt to answer your questions as we progress. Looking forward to this class. It's one of the more entertaining of all 4 of the auditing classes. Very, very full of information and very useful to the future practitioner. Look forward to answering your questions in class. Don't forget to perform all of the discussion questions, that is, write them out and submit them in Moodle. When you take your test, make sure you take your test with no distractions present. You have one 30-minute window of opportunity. If you miss that, I will not offer it again except in the case of an excused illness. Looking forward to seeing your good results. Thanks so much.